Okay, Monday 7th of August 2023, and we're looking at the M15 Bollinger brand break strategy on the dollar pairs. So just review the rules. Number one, you have to be in a kill zone. That's these white horizontal lines here. So you've got London kill zone, New York kill zone. In those times, it has to be in those times, you need to get an M15 candle closing at or outside a Bollinger Band. Once that happens, you drill down to the 1 minute, you wait for the break of structure, preferably with an RSI divergence, and then you go look for your entry on a specific pair. So this video is going to illustrate how it doesn't always work and what the problems can be. So, for example, at the beginning of, so this is Monday the 7th, at the beginning of the London kill zone, we get this nice move up from here to here. However, you don't get the signal based on the M15. What you do get, however, is a nice tap back to this New York midnight open. Okay, so you could have taken that, but not on this strategy. Then we get the best move of the day is from here down to here. However, you can't catch it because it occurs outside of the kill zone. After that, you then get what looks like a really nice entry from here up to here. However, the reality is that you can start looking for it from the close of this candle. It's what, 12:45 candle. We're in the New York kill zone. We've got a close below. So once you see that, you can go down to a 1 minute and start looking for a break of structure. And that break of structure occurs. So this is where we start looking from the M15 down to the 1 minute. So price keeps going down, down. So you follow structure down, and you could have potentially started looking at 145, but to be safe, because you see this high point here, I'd wait for a clear break of that. So that doesn't happen until the 150, and you'll see that what happened on all the crosses at the same time by 150. So you'd be looking to long the dollar, so shorting pound dollar. You can see you've already missed the bulk of that move, so you wouldn't want to take it from there. You'd want some kind of a retracement, but it doesn't matter because it didn't work. And it was the same thing on EU and Aussie dollar as well. Okay, so a couple of things to point out. If you're following that system, the same system, but on the individual pairs, there was a very nice long in here. You just about catch the end of the kill zone. You get a fantastic move up. That's in the morning session on the EU. On the GU, so you had the same move, but you didn't have the entry based on the Bollinger Band. And then in the afternoon, you had this nice move down, for example, on the AU, so you'd be waiting for price to close at or above. So we get that at 12:45. From 1300, you can start looking for that 1 minute shift in structure. Which brings us somewhere around here. Okay, so from the 1300, shift in structure. So that becomes your low. This becomes the close below the low. So at 140 you could have shorted, and from 140 you'd see there is 10 pip stop. There's a decent 2-to-1 in there. So this is part of the problem with the system. You're not going to catch. So the reason behind wanting to wait for the confirmation on the dollar index is that you get kind of a stronger double confirmation. You look for it on the index first, then you go find the trade on the cross pair. But sometimes it doesn't work out, and waiting for this actually prevents you getting decent trades on the individual pairs. Okay, let's have a quick look at the yen basket for the same day, 7th of August. So you'll see the London session was very flat anyway. So when it's flat and the Bollingers are more or less horizontal, that's not the time to use this strategy because you're going to get a lot of fake outs. So it'll just snap down and come back, go up and come back. However, when we get to the New York session, there does seem to be what looks like a good strategy. So very simply, number one, New York kill zone. Number two, M15 close above the Bollinger Band. Now, I just said when the Bollinger Bands are more or less horizontal, it's not a good time to use the strategy. So what you'd want to see, at least, is a take of this liquidity. Okay, and you don't get that take of liquidity, unfortunately. Oh, maybe you do. Hang on. Yeah, you just about do get the take of liquidity on this. Okay, so that's a valid set. So because the Bollinger Bands are still horizontal at this point, you need something stronger with confluence. So at the very least, so we get what otherwise is a good signal, close above, but then you'd want some kind of a clear liquidity take. So in this instance, we're taking this fractal from Asia. So you can argue that's not even a very good liquidity take. It's not major. It's not even session liquidity. However, price does go down very nicely. So let's drill into the 1 minute from 145. Okay, and you'll see here that because we have to wait for a shift in 1 minute structure, that doesn't occur till all the way down here. So by the time it's made that shift in structure, you've already lost half of the move, let's say. But let's stick with the plan. So we get the close below at the close of the 1408. So 1408, we're looking to short the yen. Okay, so this is GJ and the trade happens somewhere around here. So what you'd be looking at, so the first thing to note is that ideally we'd want to be seeing the GJ coming from a lower Bollinger Band, which means it's gone oversold and you know we can expect a turnaround. In this case that doesn't happen, it's never been below. So if you're going to take this trade, it has to be more or less a squeeze trade, so you're not going to get a very good pullback on this. So in order to take the squeeze trade, there needs to be a clear and obvious draw on liquidity. Now the problem is that that draw, like, let's see, this, you're here, okay? You've got relative equal highs just above it. So yes, and actually that's already been taken out there. So it's not an obvious clear entry based on this system. So you'd have to take it as a squeeze trade. In hindsight, it's an excellent trade. It goes up. However, because of the time of day and everything, you probably wouldn't have taken it. EJ is a similar situation. So 2 o'clock puts you somewhere down here. So it's just about to squeeze this high. And then you're coming into this area, which is a potential reversal zone. So in hindsight, it's a good trade. But once again, not the best setup. Slightly better because the price actually touches the Bollinger Band, whereas with the GJ we never had it. However, of the three crosses, the AJ is probably the best setup. Why? Because prior to that candle, so 2 o'clock brings you somewhere around here. So we've had the perfect setup that we look for. Okay, so on the yen, when we have the yen closing above its Bollinger Band, sorry, here, we want to see the cross pair closing at or below its Bollinger Band, and that's precisely what we get on the AJ, which means that would be the best of the three trades. So if we drill into this on the 1 minute, okay, so this is AJ on the 1 minute. So the first thing you'll notice, we had a double bottom here, so this corresponds to where that M15 was closing below its Bollinger Band. And then if you see the RSI on the 1 minute, we have some divergence. 1408 is when we get the signal on the yen. So we're coming to the chart here. So the easiest trade, you don't chase price, you just put your entry in there. Anywhere from the wicks to the body, it's up to you. Close below, stop below the bottom, and you'll see that turned out to be a really good trade. At least, I don't know, yeah, at least 3 to 1. So to wrap up, the first thing is that if you're using this system like we saw on the dollar, number one, sometimes you miss good moves. Good moves can happen outside of the kill zone, so you have to decide, are you going to stick with it with the kill zone timings or not? And then number two is that sometimes you get, like, you can tick off all the conditions one by one, but you still miss the good entry when you have a massive move up like this. So there are times when following the actual crosspair will yield you, will get you into the trade, whereas you will miss it just following the dollar index. And on the yen, was actually, so the yen, we learned that number one, don't use this system when price is consolidating and Bollinger Bands are horizontal. And then this actually, so because we're waiting for the 1 minute shift of structure, it seemed like we were very late for the trade. And of the three, although this was a good trade, I wouldn't have taken it because it's a squeeze setup. I don't take those, and this is the same. But if you follow at least 3 pairs, like I'm doing here, this one did provide a textbook setup.